properly. Starting with a new chapter. Name of the chapter is mutual fund. What are the learning points that say we have in this chapter? Having discussion about the same. First thing that we are going to understand, what is the concept of the mutual fund. Second, we are going to understand that the mutual fund as a concept. In that we are going to understand that there will be a trust which will be formed, which will collect funds from investors and will make investment in the different securities. So when it comes to the investors, then from investor point of view we are going to learn that how to make the calculation of the return for the investment that you make. And third thing that we are going to understand is, we are going to understand from mutual fund point of view certain calculations that is given a name as net asset value. Whatever the valuation principle that we have normally in accounts, exactly the same way we have over here. So the concept called net asset calculation and net asset value. First of all, from examination point of view, this is very important chapter. The reason behind that is that this chapter is very small chapter, and if it is asked in examination, it will have usually the weightage of 8 marks, 10 marks, and even 2 questions are asked from this chapter number of times. So like that, it's a very small chapter. However, at the same time, it is very important, so from examination point of view. Hardly there is any attempt of the C Institute wherein this chapter has not been tested. Starting with the concept, first of all, that's what is a mutual fund. To explain that, I give you certain examples like this. Let us say that there is a person called Mr. A, Mr. B, Mr. C, Mr. D. Like one is doctor, another is chartered accountant, another is engineer, and like that one of them is a businessman. Like all of them are doing well in their profession, in their business, in their job, and after meeting with their the routine requirement of the funds, they are having certain surplus of the funds. As far as the surplus of the funds is concerned, that is supposed to be invested, because everybody is aware that a person cannot earn till his life. There will be aging issue, there will be number of other issues because of which you are still alive, however you are not able to earn. So to meet with your retirement needs, to meet with your child's education, for child's marriage, and certain other like the targets which you have, for that you need to make sure that you are having proper investments. When I say that investment, then in that case number of investment opportunities that come in our mind. One is that the investment that we have in real estate. Another, we have investment in gold. Then we have investment which is risk free, that is government securities. We have stock market investment. Like that, these are the investment opportunities which you have in the market. Whatever these investment opportunities that you have, in that widely or broadly we can have the division of these investment opportunities into 2 aspects. One is what we understand as risk-free investment opportunity, and another is the investment opportunity where there is an element of risk. We can say that we can start with like the central government security, state government security, municipality security. These investment opportunities are absolutely risk-free. Then from that, like the central or state government security, if at all you move to, let us say, the corporate bond of C grade security, in a way that's the C credit rating security, A credit rating, B credit rating, like that you are having the investment opportunities wherein you can make investment in the corporate bonds. In that say, starting from triple A rated to, let us say that triple C rated, what happens that the gradually risk increases and definitely the return would also increase. We have always have an understanding that say if at all somebody is giving you a commitment of return, then in that case that commitment would always be given less. That commitment would be like the always less any time. So if at all you move from that investment opportunity to good investment opportunities, then in that case so the return would increase and at the same time risk will increase. Then we understand that say we are having say the stock market. There are number of companies listed. If at all we talk only in India, then in that case say the National Stock Exchange, Bombay Stock Exchange, there are number of companies which are listed. Whatever these companies which are listed in the stock exchange, say those companies want you to make investment. Say they are already listed in the market, so it is open for anybody to buy the security. Number of companies keep on coming with the initial public offer, right issue of equity share. So as an investor, you have number of investment opportunities. Now basically as an investor, what you should do? We understand that say you should first of all do proper like the analysis of government policies, because of which you will be able to have a guess or you will be able to say make an analysis that say which sector is likely to grow. Then we understand that say you have to make the proper analysis say with respect to the company. Suppose I believe that say the energy sector is likely to grow in future, or I believe that say still IT sector is likely to grow in future, or banking sector is likely to grow in future. Then in that case, say we are going to say in that specific sector we are going to make the analysis of the company, and in that say we can make the investment. There are a number of types of analysis that say we have. So for the long term purpose we have fundamental analysis. As far as fundamental analysis is concerned, in that we have the valuation with the different models like dividend discount model approach, earning approach, chop shop approach, then net asset, then book value. Like that say we have the number of approaches. Based on that say we have say certain valuation process. Whatever the value that say we compute, whatever the value which is going on in the market, you make a comparison and you take a decision that whether you should make investment in that security or not. So these kind of fundamental analysis can be done, and based on that say you can take the decision. Apart from that say we have say certain technical analysis also. As far as the technical analysis is concerned, in that we have a situation like this, that we are trying to understand that say whether the price of the security is likely to go up or it is likely to go down. In that case say what kind of position I can take in the cash market, what kind of position I can take in the F&O market. With that say I will be able to make gain. All these are the things that you can do for the purpose of say making gain, for the purpose of say making investment of the surplus funds that you have. However, in all that say one thing that say you require is the skill level, and another is that say you require the time, the proper time at which you have to make investment, proper time at which you have to redeem the investment. All those things are required to be done. So many a times it may happen that say you are lacking with one or both of them. That is the reason say we have a concept called mutual fund. As far as a mutual fund concept is concerned, in that the things are very simple. We can say that say all investors are giving their funds say to the mutual fund. Usually it is formed in form of a trust, and so the mutual fund is allowed to make investment of the funds which the investors are giving to the mutual fund. Mutual fund will say appoint experts and who will take decision on your behalf, say where to make investment. Whatever the return that the mutual fund is generating, so that the return is say given to the investors. This is the way so the simple mutual fund concept works. That is nothing great about it. Mutual fund is basically formed in form of a trust, and so the mutual fund is say collecting funds from the investors. It is say appointing experts, that is professional experts are appointed who will look after so the management of the funds, that is asset management company, and then so whatever the return which is generated, so that return is distributed or return is given to the investors. This is the way so the mutual fund is working. Okay, this is a basic concept that we have. We understand that say from investor point of view, there will be certain advantages say when you make investment through mutual fund. What are those advantages? Let us try to understand them. The first advantage that say an investor will get by making investment through mutual fund is that he will be able to get the advantage of diversification. Suppose I have an amount of rupees, let us say 5,000, and I want to make investment in stock market. And if at all I have heard about that, so the diversification advantage, that say do not put all your eggs in one basket. You should be having say the number of like the securities which belong to the different sector in your portfolio. Then this 5,000 rupees may not be sufficient even to buy, let us say, more than 3 shares or even to buy more than 5 shares. Then how can I have the advantage of diversification? I cannot have the that is advantage of diversification with a very small amount of the investment. However, when you invest through mutual fund, then in that case, if at all the mutual fund has made investment in 600 securities, then in that case your 5,000 rupees would be spread over the 600 securities proportionately. So you get the advantage of the diversification which otherwise you will not be able to get. Second advantage as an investor that you will get by making investment in mutual fund is that you will be able to get advantage of the professional management. Now once again what happens at say, suppose I have an amount of rupees 5 lakhs and I want somebody, say some expert to manage my portfolio. Now if at all I want to have the PMS, portfolio management services, then in that case say the portfolio management services I may be able to get set a fees of, let us say 3% of the portfolio or 50,000 rupees, whichever is higher. That is what's the PMS services that we have, just for example. So in that case what happens, I'd say to manage my small portfolio I have to incur huge expenses. That is the reason say what happens that say I may not go for that kind of services because it is very expensive. However, investors like me, all of us are making investment through mutual fund. Mutual fund is appointing the expert and the expert is paid to manage the entire funds. So what happens at say proportionately, so all of us bear say that expenses because the amount to be paid over here say will be spread or will be shared by number of investors like me. There is a cap with respect to the expense ratio also, so I will be able to get that information on the regular basis. Third, we understand that there is a transparency of investment. Very importantly, we understand that nowadays the SEBI is so active and the rules and regulations are also so strict that the mutual fund is absolutely transparent with respect to the schemes, with respect to the investments. The mutual fund is supposed to tell to the investor in advance that whether they are going to make investment in equity or they are going to make investment in debt. In equity also they are going to make investment, say in, let us say, large cap fund, small cap fund, mid cap fund. How they are going to place the investment, what will be the proportion in which the funds will be invested, all those things will be told to you in advance whenever they say collect funds from you, whether they are going to track any index fund or they are going to have, say, some other kind of investment policies. So absolutely transparency is there with respect to your portfolio which they are going to invest, your funds which you are going to invest. So depending upon your own risk bearing capacity, you can make investment. You want to have more risk, you want to have further more risk, less risk, or very less risk. Accordingly, you can select the mutual fund plan. Next is again in the that is the transparency point, regular reporting. Whenever you make investment in, let us say that's the Reliance company's equity share, then in that case in dematerialization format, say the demat account, say the shares will be allotted to you. So if at all I check that is I have purchased Reliance company's equity share, then in that case in my demat account, say it will be displayed that say for the Reliance company this number of shares are there in your demat account. So equity shares is say something which is allotted to me. Over here, comparatively, what happens that say when you invest say in the mutual fund, then in that case, units are allotted to you. Units are allotted to you, and whatever the units which are allotted to you, say it will be valued on the regular basis, say at the rate of NAV. The term NAV stands for net asset value. That is the way, so the investments are supposed to be valued on net asset value basis. The computation of the net asset is very simple. It is total assets minus total liabilities. And say this net asset value on per unit basis is reported on daily basis in the newspaper. In electronic media, you will be able to see that say on the real time basis. Yes, on the real time basis, say they will be say providing the same to you. So you can understand, you can know the performance of an investment. You can come to know that say how your investment is performing. This is the advantage that say you have. So these are like the advantages which you have. The mutual fund industry has grown so much that say you will be able to make the investment as per your own choice. In a way that say you want to make investment in a specific sector, like suppose I believe that say the banking sector is likely to go up, then in that case I can make that is investment in a mutual fund which is focusing on that specific sector. I want to make investment say in the proportion of the Sensex, then in that case I can make investment in the mutual fund which is following the specific, like the index, Sensex, Nifty, those are considered to be the indices, and apart from that also number of other indices are there. So in that say you can make investment. This is what we understand is a basic concept of the mutual fund. Okay. Now, as I told you, let's say what we are going to learn over here. We are going to learn over here. First thing is calculation of net asset value on per unit basis. The very first thing that we are going to understand or we are going to calculate is calculation of net asset value on per unit basis. How to compute the same? It is total assets minus total liabilities divided by number of units. Simple. Second, we are going to understand from investor point of view, let's say what kind of return that say they will have so for making investment in the mutual fund. We are going to understand that different kind of plans like bonus plan, dividend reinvestment plan, and apart from that we will be having the growth plan. So specific plan information may be given to us. One more important point over here is that say you will be getting a huge advantage of the liquidity. Now friends, what happens basically that say whenever you make investment in the stock market, then stock market investments will not be giving you say full assurance of the liquidity. They will not give you the full assurance of the liquidity. In a way that say if at all you have invested in the B category security or C category security, then in that case a number of times the trade of that security does not take place. That is the reason so you have like a chance that say whenever you require the funds you may not be able to get the funds. In comparison to that, so when you make investment in open-ended mutual fund scheme, when you make investment in open-ended mutual fund scheme, then in that case, say you are given an assurance of the return. You are given an assurance that say you will be getting a specific rate of return. I'm sorry, you will be getting a redemption of investment at the current NAV. Wherein the mutual fund itself is giving an assurance to you that if at all you want to redeem your investment, then in that case you don't have to say go in the market say to sell your investment. You just have to come to me and we will give you the redemption of the investment at the current NAV. That is what say we understand is another advantage that you have. So basically from examination point of view, say these are the important learning points that say we have from examination point of view. Please write down a small note for the learning points. In the write down first point, in this chapter, we are going to learn that how to compute net asset value of mutual fund unit. Second, return from an investor point of view. For investing in different mutual fund plans and return for different time period. That is holding period return and annualized or monthly return. Full stop. Third point, mutual fund is formed in form of a trust, comma, in which mutual fund is collecting an amount from investor and it is invested in different securities. Full stop. Return from those securities will be distributed to investors on regular basis. Full stop. Investors are allotted units, comma, when they invest in mutual fund. Full stop. It is valued based on NAV, in bracket write down net asset value. Full stop. Write down formula. Net asset value per unit is equal to net asset upon number of units. It is total assets minus total liabilities upon number of units. Next point, investor can invest in open-ended mutual fund scheme or close-ended mutual fund scheme. Full stop. Open-ended scheme means on regular basis by sale of units can be made with mutual fund itself. Full stop. Close-ended mutual fund scheme is an investment scheme where funds are locked for a specific time period. Full stop. If required, investor can sell investment in secondary market. Full stop. Next point, investor can further invest in a dividend reinvestment plan, B growth plan, C bonus plan. Seventh, investor has following advantages of investing through mutual fund. In the write-down, A diversification, B transparency, C investment as per risk bearing capacity, D professional management, E liquidity, with paragraph write-down, and other such advantages. Full stop. Let us start with the question. A mutual fund's balance sheet is as follows. Information is provided to us. The mutual fund has issued 50 units at the rate of 10. It is rupees 500. Reserves and surplus is 850. Current liabilities is 115. Total is 1500. On the asset side, investment is made in equity shares 900 rupees. Investment is made in debentures 350 rupees. Money market instruments is 145. Examples of the money market instrument are, we understand that's an investment in commercial paper, investment in certificate of deposit scheme. These are the short-term investments in which you have made investment is considered to be the money market instruments. Other current assets. The first question is calculate the current NAV per unit, and with that the second question is there. I request all of you to give answer of the first question to me and put your answer in the chat box. So calculation of the NAV per unit is very simple. It is the total assets 1500 minus total liabilities of 115. So net asset is 1350 divided by 50. That is 27 rupees per unit. Or otherwise we can do it like this also, 500 plus 850, that is 1350 upon 5050, that is 27 rupees per unit. Either of the way we can make the computation of the answer. So please write down answer of the question. Calculation of net asset value per unit. It is calculated as net asset upon number of units. Net asset will be calculated as total assets minus total liabilities upon number of units. So it is 1500 minus 150 divided by 50 units. So it is 1350 upon 5050. That comes to 27 rupees per unit. That is the way net asset value on per unit basis can be calculated in the first part of the question. I request all of you to do answer for the second part of the question and put your answer in the chat box. In second part of the question says that value of the equity increases from 900 to 1200 and value of the debenture is moving down from 350 to 300. So taking into account these two changes, we are required to find NAV per unit. So we understand that this is 1200, this is 300, this two as it is minus 150. With that, so the NAV per unit is required to be found. So answer of the second question. Calculation of revised net asset value per unit. That is what we are required to find. It is total assets minus total liabilities upon number of units. So it is 1200 plus 300 plus 145 plus 105 minus 150 upon 50. So the numerator is 1600 divided by 5050. That comes to 32 rupees per unit. We understand that say whatever is this upward valuation or downward valuation will be adjusted in the reserves and surplus, and with that so the revised NAV per unit is found. Please take down answer.